Good morning, traders. Hello and welcome to today's morning market call. My name is Ian Elkington, market analyst at HFM. And in today's session, we shall be looking at what is happening in the Middle East as Iran did put a proposal on the table, but the United States did refuse, and how that could potentially affect the markets this upcoming week. But first and foremost, I would want us to familiarize ourselves with the disclaimer that states the information herein is only meant for educational and informative purposes only. None of it should be construed as investment advice today in the financial market. Thus carry a degree of risk, but don't worry, I'm here to help you look at the markets in the right way. Now, starting us off, we will want to look at, as per the title, what is happening in the Middle East. But HFM rolled out a promotion recently, and very soon someone is going to drive home a brand new Mercedes Benz. And this is how the promotion did go about. Indeed, the competition began on 1st of March. It is supposed to end in the next 4 days on 15th of May, whereby we traders had an opportunity to trade gold and drive home a brand new Mercedes Benz, say 200. Not only that, there is going to be the second prize of five winners, which include trading stations. A third prize position, whereby 10 winners are going to be eligible for iPhone 17 Pros. And very soon, ladies and gentlemen, keep a keen eye on our socials. We are going to announce the winner after the competition does end of the Mercedes Benz. That and many more to come. But I would want us to talk about what is happening currently at the moment. Now, recently, Pakistan has been the mediator between the United States and Iran, whereby this was the middleman who was trying to broker a deal, essentially come to the table, pull out a ceasefire. But recently, we did see Iran offering and this was actually yesterday, whereby on Mother's Day, Trump did call upon the peace treaty that Iran did post, and they did mention that this is totally unacceptable. How much is the physical class? It's totally free. Now, looking at it, this is Trump, and I do quote: I have just read the response from Iran's so called representatives, and in this particular case, we are reflecting on Pakistan, and he did mention it is totally unacceptable. Now, this is why Trump does not want, did mention that this is totally unacceptable. This is because Iran did offer to transfer some of the stockpile of highly enriched uranium to a third country. They did mention which country it was, but they did mention that they were going to dilute whatever enriched uranium they have, and then they were going to give this third party country the remaining enriched uranium. But this is the clause they did mention, and they were so clear: if the United States goes against the treaty, then this third party is going to give Iran back its enriched uranium. And this is one of the things that really, really caught the people's attention, whereby, yes, Iran is willing to dilute its enriched uranium. They're willing to give a third party the enriched uranium, but on the clause, if anything goes wrong with the treaty, Iran is going to take control back of its enriched uranium and potentially advance its nuclear programs. Now, also, Iran rejected the idea of completely dismantling its nuclear facilities. And this is something that we have seen Israel want for the longest time. Israel has mentioned, and when you look at the Prime Minister Netanyahu, he did mention that the war is not going to be considered over up until that they do see Iran has completely dismantled their uranium enriching facilities, of which Iran has mentioned that is not going to happen very time soon. Now, Iran disputed the report, according to Iran's semi-official news agency Tasnim. Now, as this continues to go on, we are looking at tensions in the market. Oil prices has actually ticked to the upper side. Now, this is going to be a very, very important week in the sense that we are also anticipating President Donald J. Trump to pay a visit to China, whereby he's anticipated to have a sit down with President Xi Jinping. And this is going to be from the 13th of May till the 15th of May. We will want to look at the recent developments, what is going to happen as a result of these two people coming together. Now, looking at the commitment of traders report, which was updated last week on Friday, we have seen the data being uploaded. And if I go over to the metals and other, the data has been really, really foggy, where we haven't gotten a clear direction of where the markets are supposed to head to. By looking at silver prices under managed money, we did see institutions adding 1,121 net long positions, whereas at the same time they did add 884 net short positions. Now, they are more or less similar in terms of looking at the net long and net short positions. We shall be looking at a chart of silver in the next few minutes, looking at what we could potentially anticipate as a result of the commitment of traders. Looking at gold, gold has been interesting. Where we did see institutions offload actually more shorting positions, whereas at the same time they did add to long positions. Now, if institutions add to long positions, it means they are favoring buying the precious metal more. But on the other hand, if they are covering their short positions, if you see a negative data on the shorts, it means sellers were selling the markets, but currently at the moment they're covering their shorting positions, which usually means that gold is anticipated to retrace. We shall also be looking at a chart of XAU USD, anticipating what this data means for us as traders. Now, you can also reflect on the commitment of traders report to look at now currencies, whereby you can pay attention to. Let's take, for example, the Canadian dollar, which didn't have a lot of activities, considering we only had 3,000 net long positions being added and 9,000 short positions being offloaded. Looking at the Swiss franc, very, very minimal activities. Considering the economy of the Swiss franc currently as we do speak. Looking at the British pound, more short positions were added, whereas institutions did offload a lot of long positions, signaling that yes, indeed, the British pound could be anticipated to weaken further in the near future as a result of institutions offloading their positions. Looking at the Japanese yen, quite interesting. More positions are being added on net longs. Whereas at the same time, we are seeing a lot of positions being offloaded from shorts. Now, looking at Japanese yen, we did see Bank of Japan recently intervening into the markets, and this is reflecting the positive sentiment, whereby if they are adding on to net long positions, as you can see, 2,659 net long positions being added, whereas at the same time they did offload 13,000 short positions, meaning institutions are favoring buying the Japanese yen more currently as we do speak. Now, I do have a comment. Puzzle, beautiful to see you. Now, you will also have data from Euro, whereby we have seen more short positions being added compared to the net long positions. But overall speaking, there are more net long positions on the Euro compared to the net shorts, meaning long term investors are looking at buying the Euro more. But looking at the short term trajectory, we have seen a lot of positions being offloaded from the Euro markets as a result. Now, I would want to switch gears onto the charts. If you have any other asset that you want me to look into, kindly put it in the chat section. Let's start with the precious metal gold, whereby, yes, as a result of the tensions that we did anticipate over the weekend, we could have anticipated gold prices to actually move to the upper side. But in this particular case, we are seeing gold actually move down. And this is because of now the markets moving on to a risk of sentiment. The dollar is anticipated to strengthen as a result. Remember, the dollar is usually seen as a safe haven. Now, looking at gold prices, on Friday, we did consolidate quite aggressively, and it was non farm payroll actually, whereby we did get much better than anticipated data. Now, at that particular moment in time when NFP was released, the markets didn't react immediately, but soon after, we did see the markets actually closing with a bearish candle. Looking at today's session, Asian session did gap to the downside, where considering from Friday's closing price to where we are trading currently at the moment, gold has moved more than 410 pips to the downside. Now, looking at the data, once again, you have an opportunity to look at this information on the HFM economic calendar. If I just switch to this calendar here and then I go to 8th of May, Then you have an opportunity to look at the NFP data, which actually beat forecast, and it did come out at here's the data. We were anticipating 62,000 jobs to be added into the US market, but actually it focused where the data actually came out at 115,000 jobs. Looking at the revisions, it was actually revised even further to the upside, whereby the previous number was 178,000. Looking at the revision, came out at 185,000, meaning the labor market in the United States is resilient, staying strong currently as we do speak. More jobs are being added into the US economy, which is usually seen as positive because the more people are being employed, the more taxes are going to be collected, the more people are going to spend their money, and the end goal will be more dollars in circulation. The more dollars in circulation, the stronger the currency is anticipated to be. Now, looking at gold prices, we are reflecting on the same price action. Now, remember on Friday, if you've been joining my morning market calls, we had identified two levels in the markets. We did have 47.64, and then we did have 46.77, and we did highlight that if prices does break close below this region, I have a retest on that particular zone, I will consider looking at more shorting opportunities further to the downside. Now we are looking at this region of support potentially being broken currently at the moment, being retested as a resistance. If we do have clear signs of sellers coming into the markets where we do now see a crossover, the 50 period moving average going below the 200 and price action trading well below the two moving averages, I will consider looking at more shorting opportunities further to the downside, potentially for prices to take out the lows that we did have. 4,500 could be a likely target in the near future if the data continues to come up positive for the United States. Now, one important thing that I'd like to mention, ladies and gentlemen, to this particular week, we are anticipating very important news release. It is going to be actually tomorrow on the 12th of May, and the data is called Consumer Price Index, CPI data in short, whereby we are anticipating inflationary numbers. Now, looking at oil prices, remember, inflation is usually tied to energy. If energy prices does tick to the upper side, then we usually see inflation also tick to the upper side because the costs are going to be passed down to the end consumer. Now, tomorrow we are going to receive this information. Now, looking at the data, the year-on-year release is going to have a much greater impact, and this is what we usually pay attention to as traders. Looking at the previous number does stand at 3.3%. We are anticipating the data to actually come out at 3.4%, meaning if inflation does move to the upper side, the Fed Reserve are going to be prompted to hold interest rates where it is currently at the moment. Now, if that does happen, the dollar is anticipated to strengthen even further because more capital will be flowing into that particular economy. Whereas, on the other hand, if we see inflation cooling down aggressively, the Fed Reserve would want to cut interest rates, basically weakening the economy, and this usually reflects as a weaker dollar. Now, tomorrow we are going to get the CPI numbers, and this is going to give us a clear direction of where the markets are supposed to head to. Now, currently, as we do speak, we are anticipating inflation to take to the upper side as a result of the higher energy prices, and this potentially could reflect in the dollar being stronger in the near future. That could be tomorrow at exactly 3:30 p.m. Now, going back to the charts, looking at gold once again, if the data tomorrow does come out better than anticipated, it means that yes, indeed, gold prices could potentially move further to the downside, potentially taking out the lows at 4,500 mark. We don't have a clear uh, confirmation at the moment. Considering it is Monday, the weekly candle has just begun. The markets could be preparing for the next leg in the near future. But if we do happen to trade below the 200 period moving average, if we do have a crossover whereby now the 200 goes above, the 50 goes below the 200, and price action is trading well below the two moving averages, then that could be a very crucial sign that gold could potentially sell further in the near future. Looking at silver prices, yes, we did see institutions adding into silver prices. If you can reflect on the commitment of traders report here, here you are looking at silver. Under managed money, so this is where we want to pay attention to under managed money. With silver, we did see institutions adding 1100 positions on longs, and whereas they did add only 884 positions on shorts. Now, if that is the case, institutions did consider buying the silver metal more than they did sell the silver metal, and hence we did see prices moving further to the upper side. We still do have these ranges around $81 an ounce and $78 an ounce. I would want to pay attention to these key levels. If you do happen to see prices breaking above 81.9, a clear closure above that region, I will consider looking at more buying opportunities further to the upper side. But on the other hand, if you have prices breaking below this region, I will consider looking at shorting opportunities for prices to come back to around the $74 an ounce mark. Looking at oil prices, because as per the title of today's session, we are looking at oil surging after the United States did reject Iran offer. Now, when the United States did reject the offer, then this brought a level of uncertainty in the market, because now all of a sudden we are going to go back into the territories of the Strait of Hormuz being a main topic of debate. If the Strait of Hormuz continues to be closed, which Iran has mentioned they are not going to let go of the Strait of Hormuz, they want complete, total sovereign power over the Strait of Hormuz. Now, if that continues to happen, then the supply of oil is still going to be affected, which means oil prices are going to tick to the upper side. If you can look at price action right now as we do speak, prices from the closing price of Friday till the opening price of today's Asian session, prices has moved more than 3.34% to the upper side, signaling that yes, indeed, the tensions are being felt all over the place and the markets are reacting to it as we do speak. If it continues to persist, I will want to see oil prices trading well above the $100 a barrel. If we have a crossover whereby now prices goes below the 200, the 50 trades above the 200, I will consider looking at more net long opportunities further to the upper side. Looking at Euro USD, where are you? Here you go. Looking at Euro USD, as per the commitment of traders report, we have been seeing price action actually consolidate for quite some time. We did hit a region of support around 1.16759 previously, and we also did hit highs around 1.17886. And this was a beautiful execution in terms of prices coming back down to a golden retracement region on the Fibonacci level. And look at that, ladies and gentlemen. Beautiful, beautiful rejection around that particular region, and prices continued moving further to the upper side. Now, if this continues to happen, I will consider looking at more net long opportunities on Euro USD. But ever since Asian session did open, we did see prices actually gap to the downside, came back, refilled half of the imbalances that we have seen, but we are seeing prices still rallying further to the upper side. I will want to pay attention to the highs around 1.17806. If we do 886, if you do happen to break and close above that region, I will consider looking at more net long opportunities further to the upper side, and the vice versa could also be said. I have limp on the chart section wanting me to look at the Dow Jones, no, the Nasdaq to be specific. So Limper wants me to look at the Nasdaq. Now, the Nasdaq also did hit all-time highs during Asian session today. We have been seeing the Nasdaq actually on a frenzy. It has been firing on all cylinders ever since 31st of March till where we are currently at the moment. It has moved more than 27.2% to the upper side, showing that yes, indeed, the AI resilient, the AI infrastructure, the AI boom is currently ongoing. We are seeing more companies rotating onto data centers, AI infrastructure, and this money is anticipated to bring returns in the near future when the consumers are going to be using these products. Now, looking at the Nasdaq, we are seeing prices rally, but at the moment we are seeing prices correcting for quite some time. This has been a massive correction for close to 10 hours, prices has been consolidating. If you do happen to close above that region, a clear breakout and a close above that region, I will consider looking at more net long opportunities further to the upper side. But on the other hand, if you do happen prices breaking below this region, I will consider looking at more shorting opportunities further to the downside. I can see there are no more questions that are no more assets that you'll want me to look into. I would want to leave you by mentioning we do have online sessions. How does Ian generate his ideas? You have an opportunity to join me for the free webinar sessions. Head over to the HFM webinars in Kenya, register for getting started with HFM. And my name once again is Ian Alkinton. I'll be the one guiding you through these sessions in the next 4 hours, 38 minutes. May the pips be with you. I shall see you when you do see me next.